You sell a Strangle thinking that the market will stay quiet. But 2 coffees later, you realize the market is already 200 points away. Welcome to another video on option selling where calm trades convert into cardio. Hi, I am Pranav VK, an NISM-certified trader and trainer, and your guide here at Stockshaala by Kotak Securities. In the previous video, we learned how to adjust straddles, but in this video, we are going to learn how to do adjustment in strangles. So a quick recap of what is a strangle. A strangle's payoff diagram looks something like this. It's basically selling an out-of-the-money call option as well as an out-of-the-money put option. As long as the market stays between those two ranges, you're going to make the maximum profit. A strangle is a neutral range-bound strategy where you're going to make maximum profit within that specific range. It is wider than a straddle, but also riskier too. By now, we know that none of the trades go as planned. So that is exactly why adjustments come into picture. And for strangles, I'm again going to give you 4 different adjustment varieties. The first adjustment is shifting the untested side. The second adjustment is converting your strangle into a broken wing condor. The third adjustment is shifting the tested side. The fourth adjustment is going for a directional bias via futures or a debit spread. So let's start with the first adjustment. Let's say this is 19,800 and this is 20,000. And if the market starts moving in the positive direction and you want to make an adjustment, then what you can do is book profits on the 19,800 and probably shift it to 19,900 or even 20,000 depending on how much the market has moved on the positive side. But remember, this shift should always be done proportionately. The outcome of this adjustment is that your delta imbalance is reduced and you have now fresh credit from the 19,900 and you also have a little bit of cushion because of the profits booked on 19,800. Remember that whenever we are making adjustments, we have to move the strikes which is making profits and not the ones which is making losses. Now the second kind of adjustment you can do is converting your strangle into a broken wing condor. And you can do that by shifting your 19,400 PE to 19,300 and along with that also adding a hedge. That way you are going to collect more credit from the bullish side. Now the third type of adjustment you can do is basically rolling the tested side. So let's say for example the expiry is really near and there has been a breakout in a single direction. At that given point of time, what you can do is exit the losing position and shift it to the next expiry. That way you gain additional time as well as recovery possibility. The advantages of this kind of an adjustment is that it buys you more time, it reduces the speed of your losses, and most importantly, resets your risk profile. And finally, the fourth type of adjustment is creating a directional bias via futures or a debit spread. Let's say the market is moving in a single direction and you're clear about the momentum, then what you can do is either you can buy a call option or you could also add a debit spread so that it will save you from the bigger losses. So this way, it will not stop the car, but at least it will save you from the crash. Strangles look peaceful because you make money when the markets are peaceful as well. But don't let that misguide you. Always make sure to look at IV as well as trends and adjust accordingly. So the next time you trade in strangles, remember your 4 levers: the shift, break, roll and hedge. Defend smart and earn steady. You're watching Stockshaala by Kotak Securities. I am Pranav VK, an NISM-certified trader and trainer. Remember to like, share and subscribe. And I'm going to see you in the next video.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.